21 new age tech companies have listed since 2021, of which 6 are still trading below their issue price. Is it time to buy those underperformers or not? Puneet is joining in with key details and the key analysis. Puneet?
Well, thank you for that. We're also looking at these 6 companies that have underperformed and are still below the IPO price. And also, if there is actually a time to buy into these companies. Along with that, we're also going to be looking at 2 other data sets, companies that are given over 100% returns since their listing. And one of them will be an obvious answer in the food delivery space, while we're also looking at some which have given positive returns and have done very well for its investors as well. So 5 companies gave over 100% returns in this particular time frame. The first one's Eternal. Over 3 times is what it has happened and gone through its share of lows as well. From a low of about 40 to 45 rupees per share, it's now over 300 and done very well for its investors. A stock like Ixigo as well, and it is Payer Yatra will also come into this list, is the other one. Over 2 times as what has grown. Something like a black buck, which is Zinka Logistics, is up 133%. This is a recent listing. Zagil as well as the other one, 142% returns. And Nazara Tech, while there has been some recent challenges, has done well for its investors in the past and since 2021. So those are the 5 companies giving over 100% returns. Let's also look at the other 6 companies which are actually trading below its issue price. And those are some like Mamaearth, which is Honasa Consumers, First Cry, MobiKwik, Ola Electric is the one which has actually done very well for its investors very recently. But do remember that from issue price of 76 rupees, it's still almost down 33% and down 70% from its highs of about 157 rupees per share. Something like a Traxen, it's not, we don't cover it too much, but a lot of use for this platform company as well. And something like a Paytm, which is still down below that historic high IPO price in 2021. But the key question now is it time to buy into these companies? So let's look at each of these 6 companies in a slight more detail and lens of what the management has also spoken about this as well. So specifically for Honasa, management is positive on growth as well as margins, and the Q1 earnings did give some indication. They're anticipating 100 to 150 basis point positive margin impact and improvement over the next 4 to 5 years. That's the first one. The other one in this list is something like a First Cry as well and Ola Electric as well. Let's get all of these on the wall as well. Specifically for Ola Electric, FY26 volumes is expected to be between 3.2 to 3.75 lakh units. And that's key because it has been underperforming recently in terms of market share. So it's almost done roughly 60,000 in the first 3 months. It's a huge target to say the least. Expecting revenue of 4,200 to 4,700 crores with EBITDA break-even expected in this year. The third company is First Cry, expecting an early teens revenue growth for the India business for FY26. Profitability will of course be some time away, but that'll be the other one to watch out for. The next few companies, in the list as well is MobiKwik. And this one is another interesting one because it was a recent listing, MobiKwik, and we did see some kind of impact on the stock, but it's aiming to add roughly 5 million users on a quarterly basis, and this will help the company in its revenue growth, onboarding almost 1 lakh merchants in each quarter going forward as well. Final 2 companies in this list which is trading below the issue price as well. Let's put that up on the list as well. Traxen as well as Paytm. Traxen, largely a platform company, a lot of B2B as well as investment banking firms use this, adding roughly 100 to 200 net new quarterly accounts, as well as mentioning that over 50% of net revenue could actually flow to the bottom line. Some to watch out for. And finally, Paytm. A stock which is very well covered, has gone through its changes in business model specifically, and it's mentioning that it's striving towards a 15 to 20% EBITDA margin company and aiming that it will have better EBITDA margins by the end and essentially of FY26. Some companies actually have given decent returns to its investors from roughly about 6% positive to all the way up to 90%. Let's look at that list finally. 87% for Policybazaar has gone through 2 to 3 iterations of a change in business model and growth aspirations over this time, and for the better to say the least. EaseMyTrip is the other one. It has been a stock which is actually not done very well for its investor in the recent time. Promoter issues amongst others, but has still given positive returns. Something like a TBO Tech, car trade, has also seen a very, very good acquisition of OLX, which is boosting growth. And finally, to end this list as well, we have essentially the analyst recommendations across these 21 companies with the highest return potential as well. So we are seeing that, of course, the new age tech companies have the highest return potential. Let's look at the list now. We have something like a MapMy India, which is the first one, which has seen 5 buy calls, but that seems to be one which is the highest return potential.
All right, thanks so much.